So if you look at a balance sheet, and most of you, if you open up a 10K or an annual report, will see a balance sheet. This is a classic accounting balance sheet. So let me look at the breakdown of how accountants break down a company. On the asset side, they break assets down into current assets, basically inventory, accounts receivable, cash. Fixed assets, land, building, equipment. Accountants are big on tangible fixed assets. For some reason, if they can see it, they're much more comfortable with it. Then you have financial assets, investments in other companies. And then you have what accountants euphemistically like to call intangible assets. Now, if I went around this room and asked people to name intangible assets, you'd see lots of things come to the surface: brand name, technology. But if you look at an accounting balance sheet, you know what the most common intangible asset is? Goodwill. And let's be completely clear about this. Goodwill is the most useless asset known to man. And here's what. For goodwill to manifest itself on an accounting balance sheet, you know what a company has to do? It has to acquire another company. So if you're the greatest company on the face of the earth and you've grown entirely with internal investments, there will be no goodwill on your balance sheet. Period. The minute you do an acquisition, goodwill pops up, and here's why it pops up. You acquire a company, it has a book value of $4 billion. So what did the accountant say until just before you acquired it? It's worth $4 billion, it's worth $4 billion, you offer $10 billion. The accountant has a $6 billion problem to explain away, right? So you know what he does? He calls it goodwill, he puts it on the balance sheet, and he has to do it because the balance sheet has this very unpleasant requirement. It has to balance. Goodwill is a plug variable. The problem with goodwill is it sounds good. And when something sounds good, people feel the urge to pay for it. So every week I get emails from people saying, I'm valuing this company, it has $5 billion in goodwill, how much should I pay for it? And my response is, it's a plug variable. What the heck are you doing paying for a plug variable? On the other side of the balance sheet, again, accountants get carried away. You have current liabilities, accounts payable, supplier credit, deferred taxes, so all kinds of stuff. Then you've got long-term liabilities, bank loans, corporate bonds, and then you have an item that's called shareholders' equity. If you get a chance, take Google, look at the balance sheet. There will be a shareholders' equity number. Take any company, there's a shareholders' equity number. You know what goes into it? Everything that's happened to this company over its lifetime. Think about it. When you look at the shareholders' equity for Coca-Cola, in that number is the original public offering that Coca-Cola made, which was what, 100 years ago? And everything that has happened since. The shareholders' equity is a reflection of the past. So here's what I'm going to do first.